Hai, Assalamualaikum warahmatullahi wabarakatuh and selamat sejahtera to everybody. Today I would like to share a video regarding accounting cycle. You as an accounting student, you have to know the importance of accounting cycle and steps in accounting cycle. Jom kita tengok. In this video, besides the steps in accounting cycle, I will also share with you a related subtopic, that is types of source documents. Steps in accounting cycle. A common accounting cycle in any given business often has 9 or 10 steps, depending on the procedure outlined by the given accounting department. Each step in the accounting cycle plays an important role in creating accurate entries and managing the company's finances each time a purchase is made or revenue is earned. If a company decides to implement an accounting cycle, it is important that each step is followed in the right order. Steps in accounting cycle. The first step is transaction analysis. That is, we analysis of business transaction from the document sources. The second step is journal records. That is, we journalize the business transaction or enter the transaction information in a journal. The third step is post to ledger. Post or transfer the journal information to the appropriate accounts in the ledger. Then, the fourth step is to prepare the trial balance. The fifth step is adjustment. That is, we journalize and post adjusting entries, for example, deferrals or accrual. The sixth step is adjusted trial balance. That is, we prepare adjusted trial balance after the adjustment entries. The seventh step is to prepare financial statement. That is, statement of income and statement of financial position. The eighth step is closing entries. That is, we journalize and post closing entries. And the last step is to prepare a post-closing trial balance. Types of source documents. The documents is a source of business written as a proof for each business transaction that has occurred. There are two types of function. First is for reference document and the second one as a source of information. And only the document source of information should be recorded in accounting books. Invoice. Invoice is delivered by the seller to the buyer in the event of a credit transaction. The information includes in invoice are the goods, the quantity of goods, the cost per unit, and also the total amount. Delivery notes. Delivery notes is delivered by the seller to the buyer together with the goods. And The buyer can check these items when they receive their goods. Debit notes. Debit notes is delivered by the seller to the buyer to inform that the customer account has been debited and it will increase the debt. Credit notes. Credit notes is delivered by the seller to the buyer to inform the buyer that the account has been credited and it will reduce the debt. Purchase order. Purchase order is sent by the buyer to the seller that contains information about the goods to be purchased. Receipts. Receipts is issued by the seller when they receive payment from the buyer. It is as an evidence that receipt and payment have been made. Payment voucher. Payment voucher is an internal document provided by the business owner to record any kind of payment. Checkbox. Checkbox is used as a reference for the check payment that have been made by the company. Bank slip. Bank slip is a form that issued by the bank to record the transaction of deposit from customer or withdraw money by customers. Bank statement. The bank statement is issued by the bank to the account holder at the end of the month. As a conclusion, the accounting cycle makes accounting easier, breaking your bookkeeping down into smaller tasks, and it helps you see what you need to accomplish next. So, you can improve consistency and accuracy by following the accounting cycle. Okay, that's all for steps in accounting cycle. See you on the next video. Assalamualaikum warahmatullahi wabarakatuh and selamat sejahtera. Don't forget to subscribe, like and share. Bye.